Hello, this is the chart profit video, Friday the 13th of October, about 45 minutes after the open. This from the pre-open today. We're looking at the E-mini S&P. If we look back here, 31st of August, suspected that a new distribution had begun. Just before that point, I wrote that the minor 3-month value area high at 2457.50 and price acceptance at this higher level would suggest another distribution up has begun. That's about here on the S&P, on the spider. Price action since then has confirmed that call, and you can see that since that point we've only seen aggressive buying, that's the green bars, and no significant selling from that point at all. So we're looking for evidence that this uptrend, this distribution is at least slowing. Can't really see that on this pulse chart. The price oscillator at the bottom here is heading up and positive. The breadth is still green, and no red bars yet on the chart indicating significant selling like this one here. That green breadth indicator coming from these two indicators at the bottom here. Percentage of stocks greater than their 50-day moving average in my New York list, above 50. And this indicator here, which is the net new highs 25 5-day moving average, that's the black line above zero, that gives us the green bar. What we do have at the moment, if we're seeking out negatives, is the fact that this indicator here and here, there's a slight divergence there with the price action. And from a sentiment point of view, things are getting a little overheated. Not obviously in the Ridex data that we follow, my version of the Ridex assets ratio, but it is heading higher. We had a multi-month low down here early October, and the indicator, the ratio, is now at 13.4 with the all-time high up here just above 15. So this ratio creeping back up, largely due to a sharp decline in bear fund assets. This dotted line here showing the point late September where bear fund assets, although not at all high, did reach year-to-date high, and that's this point here. Remembering these are contrarian indicators, so bear fund assets reached a year-to-date high at that point. The market's obviously come higher, and as we've broken out again, bear fund assets have declined quite quickly, and this dotted line at the bottom here representing the extreme low. So we watch that level, but you can see if I isolate the bull fund assets that I follow, nothing extreme in this data, but the ratio getting anywhere near 15 again would sound some alarm bells. We should also mention that I'm not going to show it, but the VIX reached its lowest closing level in the database, indicating an extreme level of complacency. That was late last week on Thursday. And let's look at the investors' intelligence data. This is the chart I normally show, which gives us the net at the bottom here, the histogram, that's bulls minus bears, with a 4-week moving average of that number. So bulls percent was higher this week at 60.4. The highest since March. Bears percent was lower at 15.1. That's the lowest bears percentage since May 2015. The ratio of bulls to bears hit 4. So there's 4 times the bulls in this newsletter's poll to bears, and this is an extreme. So let's look at that. Investors Intelligence bulls bears ratio hit 4 this week. Has not done this since 2015. So the weeks here with arrows show you where the ratio did in fact indicate extremely skewed data, 4 times the bulls to the bears. I'll include this chart in the ebook, and I'll change this, which is a mistake. I've got bulls to bulls. That would be 1 obviously. It's bulls to bears, but you can see that usually the ratio reaching that kind of number indicates, at least for a few weeks thereafter, limited upside. This is the public poll. We'll include this in the ebook as well. Nothing as clear as the investors' intelligence, but if you look at the 4-week moving average in black here of the net, the bulls minus the bears, you can see that last week it did reach a multi-month high at that point. I actually said I wouldn't show the VIX, but I do have a chart within the database. 9.19 was the close for the VIX last Thursday, and that is the lowest close that's been recorded. I think data goes back to about 93. Back to the E-mini S&P, did say in the sort of day frame comment here, that's the short-term time frame, we're looking at a minor 18-day point of control. It's emerged at 25.49. Just intraday strength weakness could be assessed from that level, 25.49. Here's the live chart. Here's the level. This is a half-hour chart, 30-minute chart for the E-mini S&P December, and we are printing above that in a strong price location. Spider currently looks like this, up at a new high I think today. No sign of weakness yet at all in price or on the profile, so sentiment definitely giving us some data that is starting to look extreme, but I see nothing on the chart here to indicate any kind of a breakdown. This is a daily chart of the T-bond ETF TLT. I've got those 40-period Bollinger Bands that I like to put on. We said last week that we were down around that lower Bollinger Band. More importantly, this level here is the 9-month at 123.40, and that's strong support, and we did briefly test that about a week ago, and that's so far been rejected. Bonds are up a little bit today. Price printing below that now proven support would indicate a test down here of 119, which is the major. Currently we're in a pretty good strong price location with regards to these controlling prices. GLD, the gold ETF, this level which we've been monitoring for is probably a couple of years, 119.84, has not moved. It's the major controlling price, and we've had really good support recently, obviously reaching multi-month highs up here, then the decline back down to that support, and we've bounced quite strongly. As long as we hold this level in the longer term, gold in a stronger position, strong price location. Just adding the 40-period Bollinger Bands here, coming up off the low from late last year. That lower Bollinger Band has been approached and touched a couple of times, and GLD has bounced back pretty strong. Potentially what we're now seeing, which can be a strong pattern, is support right on that major controlling price. As you'd expect, we're looking here at the dollar-yen. From this price high here to this price low over here, we have this dotted halfway point, and as I've been writing in the pre-open for quite a while, been struggling to overcome that resistance. However, this chart is holding above 111.30, which is the 2-year controlling price, so this is strong price location but unable to print above that resistance. Price below that point of control down here would put this chart in a weak price location and indicate lower. That would likely be reflected in a higher gold price. UK's FTSE 100 index, again with the 40-period Bollinger Bands. You can see the FTSE has pretty much held that lower band when tested, whereas you can see price pushing up through the upper Bollinger Band at this point, a reasonable indication of an uptrend. We are now looking at price up into that upper Bollinger Band here, and most importantly above the 18-month at 74.13. FTSE in a strong price location if it's above this 18-month. FTSE 100 being a large cap index. You can see the small cap index for the UK at the end of this week pushing up into that upper Bollinger Band or above it, and actually right up around its high here, certainly outperforming the large caps this week, and that would have a lot to do with the British pound, which is rallying back this week and is actually just managing today to break above this halfway point off what I call the Brexit high to this low. As we've discussed, the pound in a stronger price location since it's been holding above this level, which is the 9-month, this red line. So all of this consolidation, price action above that 9-month, so strong price location, and if we can see the pound consolidating above that halfway point, all of this followed day to day in the pre-open, puts it in a strong price location and that not helpful for the relative performance of the large caps, the FTSE 100. USO, the oil fund ETF, currently just here printing above the major at 1014. So just in the short term we're holding a good strong position here. A clear higher low on the chart above that level would indicate strength, but price back underneath 1014, weakness. Euro FX chart, we talked about this pattern, higher highs, higher lows, which I've marked here from the low over here, indicating an uptrend. And we talked about this low here actually wasn't quite breached, came close just a few days ago, but I think that level held. Just checked, yes it did. So this uptrend pattern still intact. Let's end with the dollar index. It doesn't look to me as though this persistent downtrend since the start of the year is over. We don't see any evidence on this chart. We've had a rally back to the 40-period Bollinger Band here, but most importantly we're printing below this level, the 8-month at 93.46, so this is weak price location. I want to see time printed back above that level before looking at the long side of the dollar index. That might give us this kind of inverse head and shoulders pattern, which often, according to the really old books on technical analysis, may have some reliability as a bottoming pattern. Currently we look like that, and we're in a weak price location. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.